I am Kevin Adams. I'm one of the managing principals here at Christensen Financial. Part of my role is to oversee the products and the various things that we offer to our clients. And I'm really excited today. I want to talk about reverse mortgages. And I have our resident expert, Cindy Myers, here with us. Cindy joined our team last year, and we were super excited to bring Cindy on board. She is super well known within the industry as being a reverse mortgage expert. And not only that, she is a consummate professional. And one of the things I really like about Cindy is the fact that, that she takes the time to talk with her clients, and not only her clients, but her clients' family or loved ones, and the people that might be interested in reverse mortgages. Are a very interesting product, but they're very much different than forward mortgages. And there's a lot of questions, concerns, uncertainties that a borrower and the family might have. And Cindy really takes the time to, talk to people about their situation, their goals, and really to make sure that the reverse mortgage fits within their financial plan. And that's really crucial in the reverse mortgage industry, because it's a delicate product, and it's great for a lot of people, but it may not be the right solution for other people. And the last thing you want is somebody who's going to take advantage of somebody not doing the right thing. But Cindy absolutely always does the right thing, and that's why we were absolutely delighted to bring her on. So Cindy, welcome. Thanks for joining us today.
Thank you. I'm very excited to be here today. It's really a great thing to be able to get out and speak to a bunch of people at the same time, because this is a great product. There's so many misconceptions about it, and one of my goals, as you know, is to spread the great news about it.
Yeah.
Some of the things we're going to talk about today is a lot of the changes that are happening. So
yeah. And, it's interesting. I think that I have heard more people asking about reverse mortgages in the last month and a half than I think we really have in the last maybe 3, even 5 years. Why do you think that is? Why is there this renewed interest in reverse mortgages right now?
Well, I think there's a couple of answers to that, but one of the biggest things is really honestly fear. Mm-hmm. A lot of the seniors are really starting to question, how can I stay in my home? What can I do that can help me to protect myself, protect my investment, protect my retirement? And I think that's one of the biggest things. Also, a lot of people have looked at reverses for many years, and now's the time. They're just kind of going, wow, this is a really great product. There's been a lot of changes to it, and it's a very safe solution for people. So I really think that that's part of the biggest reasons that we're getting so many questions and so many people interested.
Yeah, absolutely. So before we get into a lot of the benefits or different things about reverse mortgages, can you because we might have some people who have never really heard of a reverse mortgage, or they don't know how it works. Can you give just a brief idea of how a reverse mortgage works and what, basically what it is?
Absolutely. A reverse mortgage is basically, and really incredibly, because people don't understand that it's just a mortgage. It's a mortgage that allows the borrower to tap into their equity. There are no payments required. However, the borrower can make payments. Someone who's 62 years of age or older, they're eligible for the product if it's their primary residence. So there's many cases that we're able to come in and extinguish that existing mortgage, and they no longer have that mortgage payment, which in turn creates revenue and income in their monthly monies that they have to be able to survive in this retirement spend down phase of their life, is what people call it. So we can do single family residence. Actually, we're able to go all the way up to fourplexes. So we do duplexes and fourplexes. We can do condominiums if they are approved by FHA. Now, keep in mind, this is an FHA product, which is something that's great because it's protected by the FHA as well as having an insurance policy on it. So that's one of the biggest things that I like to make sure that everybody understands, that this program really is secure. There's a lot of checks and balances that are in place to make sure that the loan is appropriate for that senior borrower.
Right. So, just going back, so a reverse mortgage, there's no principal and interest payment. Right. You're basically, taking from the equity of your property and you're adding to the loan balance as time goes on.
Exactly.
So, is there any point that the borrower has to pay it back?
the borrower at the time that the last person moves out permanently. So if there's a couple, one can move out and go into an assisted living, the other one remains in place. So when they both have moved out permanently is when the loan is due and payable. And the really cool thing about the product is it is a non-recourse loan. And a lot of people don't know what that means. What does a non-recourse mean? The loan is actually against the property, not the borrowers. So therefore, the property is being protected by that insurance policy. So at the end of the mortgage, when they both moved out permanently, they simply would pay off that balance, the estate, the heirs, whomever, or even the person that decides they want to downsize and they want to just get out of that property, they sell it and they pay off that reverse mortgage, and they get to keep the remaining equity. That remaining equity goes to the heirs as well. So at the end of the reverse. Yeah.
So one of the common perceptions that I hear a lot is somebody thinks that the bank owns the property, but that's absolutely not true.
Absolutely not true. It's never been true either, even though there's been many people over the years think that. The property is simply a mortgage. I say that several times when I'm meeting with everyone. And by the way, one of the practices that I try to stay very close to doing always is to have everyone that's involved that would be affected by somebody doing a reverse mortgage. I get them involved in the process. And hopefully there's a financial advisor as well that we get involved. And sometimes elder law attorneys. So this is a very consultative approach that we always take to make sure that it's a fit. Because like you mentioned in the very beginning, a reverse mortgage, all the boxes may be checked, but it still might not be a fit for them at that time. So we're going to all work together to try to find out if the product works for the senior.
Yeah. So, and one thing I want to add, so a reverse mortgage, you don't have to pay the principal and interest, but the borrower still is responsible for paying the homeowner's insurance once a year and the real estate taxes.
As well as the homeowner, the HOA if they have one.
The HOA.
Yeah.
So, so, and then the borrower it has to be their primary residence. They can't move out into an assisted living facility or some other area or rent the property out.
Exactly. So there is a nice little piece to the product that allows the borrower, because sometimes we have people that have to go into rehab or have some things happening in the latter stages of their life. As long as they maintain the property within a 12-month period and in the property just actually one day, and keep that primary residence as their homestead property, and obviously do it all the legal ways that they're supposed to, they can stay in the property and the reverse does not become due and payable. So there's some nice little things to protect them, because none of us have a crystal ball. None of us know what's going to happen, as we age. But this has become a solution which has been very encouraging to me, because for many years, I've been doing this for a long time, but for many years, a lot of times the doors were shut on my face as far as to talk to the financial advisors about it, because they just really didn't see it as a tool that they should use. But I'm seeing more and more people come around to the idea that this is something that if you're 62 years or older and this is your primary residence, when you're looking for a mortgage, you should consider putting this into the whole group of what you're looking at to see if it is a fit for you.
Yeah. So talk about some of the ways that it might fit into somebody's financial plan.
Okay. So some of the things, again, when you asked the question earlier, what is the things that are changing right now? Obviously, we're in a very volatile market. Portfolios, just like back in 2008, and I was around during that crisis that we went through, we've seen portfolios shrinking. And in order to recover, you need usually time, right? So if you can leave something alone and let it have time, then a reverse mortgage can come into play right now, especially to kind of bridge that gap and give them some liquidity so where they can stop bleeding down their portfolio and leave it alone and let it grow back if possible. So that's what I'm seeing a lot too. I'm having the questions from my financial advisors that are like, every month when you get into retirement, there's a required monthly draw that one has to take. A lot of people are doubling and tripling that right now. And so that's something that a reverse mortgage could help with as well.
And that's kind of a double whammy. I mean, if, with COVID and everything that's gone on, I mean, stock market is taking a hit. I mean, I know we've had a little bit of a resurgence here in the last couple of days, but, overall, I mean, the stock market is taking a hit. So if your asset value and your portfolio are down, and then you start taking more money out of that, it's a bigger percentage of what you have from a retirement asset standpoint. So that might compress the amount of time that you would have available,
Right.
For your
Recovery.
portfolio. So
Mhm.
that's interesting, because I think that's probably one of the things that I'm seeing, as I'm hearing people, asking about reverse mortgages, the people that had looked at it before who didn't maybe make a decision, that's one of the factors, is they were looking, now they're looking at a different source of cash flow,
Exactly.
planning out for a longer, retirement. Another thing that really, I'm seeing now, I'm a big interest rate economic guy, so I'm always paying attention to the economy and the things that are going on. But interest rates right now are at an absolute low. I think the lowest that they've been for
Forever.
HECMs and reverse mortgages, like
Mhm.
almost ever. And just to point out what that means for reverse mortgage borrowers, is the fact that it makes the amount of loan available much larger.
Exactly.
Yeah, because one thing I think is very important for people out there to understand about how a reverse mortgage works. It's a function of how old you are and how long you have projected to live, really, from that standpoint,
Mhm.
and how much equity you have in your house.
Exactly.
And then the interest rate is like a discount factor that determines how much how much of that equity you have available. So when the interest rates are lower, like they are right now, that means that the amount of your loan is much larger.
Yeah.
Um,
That just recently, we just saw the first real shift and change in that just in the last couple of weeks, where
yeah.
a borrower that I may have quoted last month is, I can actually use an example.
Mhm.
I had one that had, perhaps we were paying off their mortgage and they had perhaps $25,000 of a lump sum at closing. But
Mhm.
within 1 week's time, because of this change in the rates, it gave them another $11,000 because,
Wow.
yeah,
I
and
mean,
so it
that's
just
that's
kind of,
almost 50% more than what
yeah, it was a big
what the
shift.
right. Yeah.
It made a big difference in a lot of the people
Mhm.
that I was working with. So,
And do you recall what the general scenario was for that bar? Like how old they were, how much equity was in the house?
actually, it was a borrower that I was paying off a mortgage, and there was
Mhm.
probably about an additional 15 to 20% equity left. And
Mhm.
obviously, the way that they restructured this program back in 2015, they're not allowing all the money to be pulled out at once. They will
Right.
allow you to pay off mandatory obligations, and that's a mortgage.
Mhm.
So with the money that's left over from that principal limit of what you have access to as a borrower, you can take 60% of that cash at closing, or you can just leave it in a line of credit. And what's really,
Right.
really cool is the line of credit now, they changed this within the last couple of years. The line of credit has a growth rate on it. So
Mhm.
perhaps they only need to get rid of that mortgage. And that's really our goal when we're talking.
Mhm.
So if that's the case, they're going to leave that money on that line of credit. And as they age, they get access to more of their equity as they get older on that line of credit. So it's kind of like going down to your local bank or your community bank and open up a HELOC or
Mhm.
home equity line of credit. And I know there's a tongue twister there. They don't really, seniors are finding it more and more difficult to qualify for those. I mean, even
Mhm.
somebody who's working these days finds it hard to qualify
Yeah.
for home equity line of credit. So not only are we providing perhaps some liquidity, paying off a mortgage, but we're also opening up a line of credit for them. So there's all kinds of benefits with this product. And
Mhm.
keep in mind, every person is different. I've not seen in
Yeah.
every person I've spoken with ever anyone that looks alike. They're all different. So
Yeah. And so, and that's a great segue, because I think one of the great things about you is, okay, you've been doing this. I didn't want to date, how old you, but you've
yeah,
been doing it for, over a decade and a
yeah,
half.
good.
And one of the things that you are truly an expert at is trying to figure out between the different options of a reverse mortgage, like how that fits into somebody, not only how does it fit in their financial plan, but which one, how do they make the
Mhm.
decision as far as which one's the most important? And I wanted to point that out because I think that's really important if you are interested in learning about a reverse mortgage, to talk to somebody who's going to take the time to explain that.
Yeah. And I think early on in my career, as I decided to really make this a product that I solely became an expert at. Obviously, I've been in the business for a couple of decades, but I really have solely focused on this for over a decade. Put it that way. So when I decided to do that, it was really important to me to make sure that I approached it just like what you said, because it's I don't sell a product. I provide information, and I bring a lot of knowledgeable, trusted advisors along with me to make sure that we're doing the right thing. And I'm really proud of that. And I love this product. I've seen it change people's lives. It has changed a lot in the last probably 5 years to the betterment of the product, because it was kind of loosey-goosey a little, maybe even a decade ago, where anybody could get one that was of age, equity, and it's not always the right thing, because you don't want to put a senior in a situation where you're just kicking the can down the road. Right. And that's what a lot of people were doing. And unfortunately, well, fortunately, actually, they can't happen now, because we have financial assessment. We make sure that they're really able to utilize this program for what it was created to do.
Yeah. And why don't you talk a little bit, because one of those changes was putting in, property set-asides and, life expectancy set-asides. Talk a little bit about those set-asides and how they work, what might lead to them.
So in the past, we didn't look at credit at all. It was like a little box, a little checklist, and you just had to be 62 years of age, primary residence, have equity in the home. And, and they let you take out all the money, basically. So back in the day, if you're 80 years old, you're taking 71% of the equity out. So, an 80-year-old today, we're looking at centurions, okay? People are living longer. We're trying to stretch this money out to give them the ability to stay and age in place. And that's what this product is supposed to do, right? So if we get down the road and we're looking at the actuarials of what they get access to, and you get a 0 or a goose egg and age 91, something like that. What are we going to do? They're going to have to move out? No. We want to make sure, and they don't with this product because they're protected, but we want to make sure that they're protected enough that they can still pay their taxes, their insurance, and their homeowners association, right? So FA, financial assessment, came in, and we do look at credit, and we're only looking at credit really, honestly, for 2 factors: the willingness and the capacity of that borrower to maintain their taxes and their insurance and if they have a homeowners association. So that's the goal of it. It really changed the game for a lot of people. A lot of people were scared of it. I embraced it, and I think that's why I'm here today, because it needed to be, because it's sure the program, made sure that the program is going to be around for decades and generations to come. So everyone that I feel that I've put into this product has been, checked out even before FA. I made sure that they were taken care of. So financial assessment is key.
I think that's a great thing that you mentioned. When reverse mortgages really first came out, and several years ago, before they made these changes, it was almost, not only could anybody get a reverse mortgage, but almost anybody could originate them as well. And what I've seen over the last several years with the changes and the improvements that they made in the program is now you have professionals only that are out there originating reverse mortgages. People who have training, they're doing the right thing. Of course, you've got the FAs, involved as well. But I think overall that's helped improve, kind of that reception of reverse mortgages, with, financial advisors and, other professionals in the industry.
Well, I think recently, even if it was last year or the year before, one of the biggest topics at the Financial Planners Conference, the annual conference, they were talking about reverses, how they should be utilizing them. Not every company is on board quite just yet, but the big names like Wayfall, the people that are really, really embrace this program and have really big, not big, they have people admire and respect their opinion, and they're coming out and saying, listen, this is a tool that each of you should have in your toolkit when you're talking about planning the retirement plan and getting the right goals set in place for your clients. So I become kind of a new widget or something within those folks that I've been knocking on the doors for a lot of years, and now they're embracing me. So I'm really appreciative of that, and love the fact that they're open-minded about this is another tool that if you're 62 years or older and you have done the right things. I do run into people, by the way, Kevin, that have 3 mortgages at that age, or even in their 70s, they'll have first, a second, and then maybe a home equity line of credit. And so those people I can't help, but usually they may not be a financial planner's client either in that situation, but I've seen it. So, you know, I think there's a generational, you can look at somebody when I see the numbers, and I don't even have to see their age, but if I see their numbers, I can kind of tell what generation they're from, because there's certain generations that they believe that the goal in life was to pay off your home and have no mortgage payments ever again. And we've got a lot of those folks living in the villages, quite frankly, and pay cash for their homes, but they're now, those folks, a lot of them are reaching out to me because they love falling in love with that village life, and they need some more money to be able to maintain it, because a lot of people are in retirement. And this is an interesting number that I was told recently by one of my financial planners, is that a lot of people are in retirement now longer than they were.
Wow. That's, you know, I mean, that's,
you gotta have things planned out right, and things don't always go the way that we expect. Look at COVID. Everybody's life in some way has changed. So, you know, you got to have some extra ideas, I think. So.
So let's talk about COVID. I mean, obviously, I mean, this has been, you know, just a tremendous, unprecedented event, you know, for, you know, the world, you know, but, you know, how are you seeing it affecting, you know, retirees specifically, who maybe they were thinking of going into assisted living, maybe they're going into, you know, some higher density living, you know, that had support, but, you know, number one, you've got a population, you've got people that are most at risk of COVID, and it seems that a lot of the spread has been in, you know, retirement homes, assisted living facilities. You know, I know personally, just from talking to, you know, some folks that I know, and some conversations that I've had, that people are no longer, you know, they originally had that plan, or, you know, are living in, you know, some kind of retirement living, but now they're realizing, like, hey, I want my space. And, you know, this might be a way, you know, to you know.
I agree. I think that is one of the biggest, most hot topics right now that I'm hearing everywhere, because people, not everyone has long-term care in place. And that's usually most affordable in your 30s and 40s. And we're all trying to raise our kids, pay for college, do all these kind of things. And so we're not always conscious about getting that particular insurance policy in place to protect you. So, you know, a lot of people are having to look at a reverse mortgage to kind of put it in lieu of that. So I'm hearing a lot now that people want to utilize more and more that equity that's there. The people that believe that they never want to have a mortgage ever again, they believe that, okay, I can use a reverse mortgage, like having long-term health care, by pulling that equity out and being able to pay for those home health care providers. There's so many companies. I mean, I could just name off a plethora of different companies that I work with that come into the home, depending on what stage of your life that you're in and how much need you have. It can be as little as shopping and companionship, or even having a healthcare professional take care of you and keep you safely in your own home. So I think that right now is a great time for people that are at that phase in their life to maybe just consider it. Give us a call. Let me help you, along with all of your people and your team that you have in place that helped you. I work right alongside them to show you if this worked for you or not. But home health care providers are becoming more of what people are looking towards, because they can age in place and have the people come in and leave at the end of the day, whatever. And this is helpful to adult children. You know, adult children are contacting me saying, I live in Chicago and my mom's in Florida. You know, I need to get something in place. I actually have a file right now that I'm working with, where the adult child person reached out to me, and that's how we're doing the reverse for. So.
Yeah. And so talk to me about using a reverse mortgage to buy a home. You know, it's not only for somebody who, you know, has a home and they paid the mortgage down, but this could be a tool for somebody who's looking to buy a home as well.
Yeah. And that's the product that not a lot of people know about. And obviously it's been a mission of mine for many, many years to educate the realtors about it, because we're seeing more of these 55 plus communities popping up all over the place. Margaritaville's a great one right out here close by. Obviously the Villages have been around, one of the largest ones. It is the largest 55 plus community in the country. So people are wanting, we're more viral, and at 62, it's more like being 42. So when people are retiring now, they want to do stuff. They want to stop living, so they're moving to these 55 plus communities. So what a reverse for purchase will allow them to do is to make a one-time only down payment, and it's kind of the flip of the current reverse. So they're needing to put money into the property, and then the remaining part we do a reverse on. So example, somebody who will use a 70-year-old person is going to need about 65% down payment, and then the rest would be in a reverse mortgage. This is really attractive to those individuals that are coming from up north, and they have maybe 300,000 in cash, and in the past they've just put it all down and bought the home with cash instead of doing it that way, because I am working with people that did it that way, and now I'm reversing it. So they have 2 times a closing cost. A reverse for purchase allows you to relocate, purchase with the product, have no mortgage payments, and have some liquidity still left over, or actually buy a bigger home than what the $300,000 would allow you to buy. So the reverse purchases are a really great product. I have a lot of realtors really embracing that as well. So I think right now, I guess if you ask me, the hot buttons is everybody's trying to stay wherever they are at the moment because of what's going on. But if you're looking to relocate and be closer to your family, be closer to the grandkids, we see a lot of people utilizing the reverse for that.
Well, and we may have some people who are, like you said, realtors or other industry participants on the call here, or at least, watching this. Talk to me about, one of the biggest misperceptions that I see out there is, especially in the realtors think that you can't close a reverse mortgage. You have to wait 90 days or 120 days to close a reverse mortgage. Tell everybody about how that process works and how we can actually close these on time, so that you're not, in a bad position when you make an offer. Especially right now we're in a seller's market. How can we still close a reverse mortgage quickly
and hit the closing date? Very important.
Right, exactly.
Very important. So that's one of the things I'm really proud about, especially by coming on board and being a part of the CFI team. We're very, very well versed in how these reverse mortgages work. You bring my knowledge of many, many years of doing it along with the talent that's here, and we have an incredible team. So I typically am guiding that realtor. I mean, I very rarely am getting a reverse purchase with somebody who has never spoken to me before. So the realtor has already been kind of educated about, we need to make sure that the certain addendums are right, and that we're putting the right expectations for a closing date. Okay. So reverse mortgages typically take 30 to 45 days to close. There's a lot of little moving pieces, but with a purchase, I shouldn't say this on air, but I guess I will, or live, but I've closed a purchase before in 17 days. So if you do everything right, and you've got a team and somebody who knows how to do this, we can get this.
So if you're a listing agent and, somebody comes to you with a Christensen Financial, client that wants to do a reverse purchase, they're in good shape. There's
exactly. And one of the things I do I do a lot of open houses with my realtors, and people are like, really, you do? Well, I'm not always there physically, but I have flyers that we provide to them to show them, hey, this house is listed at X. If they're 62 or 72 or 82, this is how much they need for a down payment. So we try to work in harmony with our realtor partners, not only for the traditional mortgages with open house flyers, but we will provide a reverse mortgage flyer for them to kind of give them another option, because there are more and more people moving to Florida every day. I mean, young people, old people, it doesn't matter. But we want to make sure that we can take care of them from both sides of the spectrum. So.
So what do you see out there are the biggest questions that that you see, from time to time, that the most frequent ones that maybe we haven't addressed?
Yeah, I know. I'm like, okay, have I addressed it? I think a lot of them have changed. I still, however, see because remember I told you I bring everybody in. I try to make sure that all the people involved that are going to be affected are there. There can be that one holdout that says, well, wait a minute, that's my inheritance. That's
Right.
So I get that, and then I talk them through. Okay, so if you're going to get this when mom and dad passes away, what about the in between while they're living? Are you going to be taking care of them and maintaining so that they get to, maybe if they want to travel or they want to do some things, because quite frankly, it is a legacy. A lot of people have that legacy embedded in their head, but they still, I think that everybody to their core, for the most part, wants their loved ones to have the best life and have the best they can while they're here with them.
Yeah.
So, but I still see that one person here and there that's saying, well, that's my, they're going to be taken away from that. Well, yeah.
Yeah.
So that's
I mean, that's a big concern. But I think, one of the great things is you do, like you mentioned, take the time to talk to, the adult children and the people that, have, a stake in the decision.
Right.
I go back, I always think of reverse mortgages as a cash flow tool, and I had one of my finance professors always he had this statement. He actually had a shirt that said, happiness is a positive cash flow. And
it is.
And I think some of the things, really from a benefit standpoint, if somebody wants to move to the Villages or Margaritaville or, somewhere, like you said, you want to have a good quality of life. And, cash flow is a big part of that. When you have a regular traditional mortgage, you're paying a monthly principal and interest, payment.
Right.
You're paying, monthly that your cash flow has to go out to. I talked to a number of retirees. Some of them have a job at Lowe's or Home Depot or, Walmart or, maybe a part-time job just to, so they can make some extra cash flow to do the things that they want. But this could be a great solution for somebody, in this situation looking, really to maximize, their day-to-day living and their day-to-day cash flow.
Yeah. And, it's interesting because like I said, there's the generational thing where people didn't think of it as really an asset. It's just kind of what you did. You just paid off your home. But it's typically one of the largest assets that most people have. So if we can help them and showing them how they still own the home, there's going to be equity left in it. And quite frankly, I rarely see ever where unless they've got huge mortgages that we're paying off. And even still, we don't see that negative, even up to age 99. There's going to be something left, unless we see a really major downturn. And we didn't mention this because the insurance policy that's on this product, if we see another 2008 happen and values drop, and when both borrowers pass away and move out, the estate is not responsible if there's a shortfall and if there's money owed. So that's a really important thing. So you're able with this product to allow that senior to have that life that they're trying to achieve, get some liquidity, do it, whatever their needs may be, and they're always different, and take care of that portion of it. And then still they're protecting themselves with this product, with that insurance policy, to make sure that nobody's left behind after they are gone owing anything that they may have done. So that's
So, and so you get that protection around the downside, but still, if property values do go up and they continue to go up, then, then your heirs still could, benefit from that.
Absolutely.
So it's kind of a good solution on both sides of it.
Yeah. One of the other things you ask, what are some of the maybe questions or things that I hear maybe that might be a negative? It's like, one that I do hear is the cost of these reverses, right? I mean, I'm sure you've heard that. The cost of reverses. So here's what's really cool about being at Christensen Financial for Cindy Myers, okay, and doing reverse mortgages. I have access, being that we're a direct lender, to the investors that provide this product. I actually put together my borrower's scenario, nice little package, and then I go to my investors and I shop the product for them. And I make sure that if there's any kind of discounts or lender credits or anything that they're eligible for based on what their scenario is, they're going to get it. So if you go to a captive type environment, or you're just going straight to that lender, they're going to give you one option. Where being here at Christensen, I'm able to go to multiple options. And that's one of the things that my borrowers love, because very rarely are they getting boxed in to this is that what you have access to. Now, I will tell you that all reverse mortgages are every borrower's scenario, they get the same access to the same equity based on their age, what they owe, what the value is. But where it changes is what we have the ability to do, have volume incentives that we can pass along because we do so much volume with different lenders. So that's a huge thing that I promote with my partners, that they know that perhaps it may be just a little bit more, but I'm able to do that for their buyers in many cases, sometimes the borrowers. So it's really, really cool to be able to do that. So
yeah. So talk about the process of going through and getting a reverse mortgage, or at least learning, what, if somebody's interested right now, maybe maybe they want to have more questions, but what's that overall process? Walk us through, how somebody would go about,
Sure.
getting a reverse.
So yeah, and we just mentioned it the other day, because we'd done some marketing campaigns and stuff with the people within our marketing department, and had some great success with that. So I have a real good example of one, and it'll kind of start really the clock for me when I'm telling somebody 30 days to 45 days. It starts when you decide to say, yes, Cindy, I want to move forward. So what does that mean? Okay, I've provided you your quote. You see what you have access to. I still have not shopped it with all the investors, but I've given you kind of a generalized idea of these. This is what it would cost you. The most it would cost you is what they're looking at the point. So then the next step is we do the financial assessment. We make sure that there's no issues with any of concerns of paying their taxes late or not, or their mortgage late, or what have you. And after I finish this, I will go back to financial assessment, because I didn't answer your question before, and I just realized that. So financial assessment's done, they passed that, and that's just we just pull credit, we take a look at credit, make sure that everything's good there. We're not looking at scores. Then the next step is the borrower has to make that commitment. Okay, I'm going to move forward. We actually give them the information through their proposal to get their counseling done. And everybody's like, what is counseling? Well, I really like that there's counseling. There's a third-party company that is a requirement of the product that every borrower must go through, and it's telephonic. They call them, and they go over the quote that I've provided them, and they walk them through, make sure they understand everything as from a different person's voice, telling them, do you understand what you're looking at? And then they get certified, and I get a copy of the counseling certificate. So that's typically a week. Okay, I can do it quicker than that, but typically that'll be a week. And I get provided that counseling certificate, and then we do application. Application, that's when my job really starts, because I'm really having to go out and start negotiating with those investors to find the right one, see where we can maybe perhaps get a little bit here, a little bit there. And when that process happens, the borrower is committed to going through the process. They're not, they can still change their mind. So, I always want to make sure that they're not fearful of, oh my God, I've done this, now I have to go through with. I'm going to come back to them and say, okay, this is the best that I was able to find within the different investors that I have. Then we get all the documents from the borrower that's required and needed for processing. I submit it to processing, and we're looking at about a 20-day. This is an actual from that point. So we've got about 10 days already there. Then we got about another 20 to maybe 30 days. And a really, that's a long time. I mean, a lot of people, it takes them 90 days to do these loans. If you know what you're doing, you can do them in 30 days. And you know that we do them in 30 days or less. But I don't ever want to put the wrong expectations, so I let them know, it could take a little longer. The longest part, I think, is the appraisal process, okay? And during COVID, there's an interesting thing that happened during COVID. We weren't wanting to have anybody go inside the homes, right, of the seniors. And we didn't miss a beat, because we were able during this time, and I know we're still in it, but we're talking about when everybody was locked down, right? And we were able to do exterior appraisals, and the borrowers or their family members were able to take the inside pictures for us. And the appraiser was taking, on the property, walking the property, doing everything they need to do on the exterior. And we were able to do that. So sorry about that.
Hey, it's another client, right?
Actually, it is. So that was really interesting, that because I was concerned about, the most vulnerable. We talked about that. We've got, we're working with the most vulnerable people right now with everything that's going on. So I'm trying to think of all the protective things we can do. I've had closings, as you know, during this time. I'm literally FaceTiming while the closing is happening. A notary's there with a mask on. Everybody's with a mask on. So it has been challenging, but we've been able to take care of it and do some extra precautions. So it typically, to go back to the very beginning of that question, it's about a 30-day process, but I like to always say 45 to give just a little buffer there. Now, this is a refinance. If it's a purchase, we got a little different track that we're on, because we're trying to achieve the closing date. And with all the things that we have in place, with everybody knowing their role in this process within Christensen Financial, we're able to achieve those goals. And I forgot my train of thought when I was going to say I'm going to go back to that. It had something to do with financial assessment, but I can't remember it. So
Well, that'll be for the next one, right?
So
well,
go ahead.
No, I was just going to say, it's truly, we're truly blessed and excited to have you on our team. Reverse mortgages, Christensen Financial has been doing them for 15 years. We've been doing it a long time, but, to bring, you on board with your expertise, and, really, with the team that we have in place, we believe really that this could be a great product for the right people. It's not the best decision for everybody, but the most important thing is that we want to make sure that we have the ability to help you decide and make that decision that this is the best solution for you. Whereas, a lot of companies that are in the forward space don't invest the time in the product. They don't. A lot of people just don't. They don't learn about it. They don't, it's not one that you could do really part-time. You really have to be a full-time, reverse mortgage professional to understand the product and to really, hone down and make sure that you're helping make the right decision. And, at the end of the day, we're meeting with, financial planners and, elder law, attorneys and, a lot of people. So it's for you to take the time we're super grateful to have you on the team. But that's what we do here, though, at Christensen Financial. Even though this is a different age with COVID, we do home loans with a human touch. And so adding the technology, but really just that personal approach, I think, is important, and you embody that.
It's really, really important. And one of the things too that a lot of my referral partners and trusted advisor friends that I work so closely with know that when I'm going in there, I'm kind of an extension of them. Because I'm asking those questions. Do you currently have someone you work with? If they don't, they're going to be introduced to someone that works closely with me. Because it's very important that people realize that you have to have all these things in place in your financial, in your retirement years. Because, durable power of attorney, your advance directive, all those things. I ask all those questions. It has nothing to do with what, my product is. And that's why everybody looks at me as though I go in consultatively and speak to them about what is it we're trying to achieve. And it may be a reverse mortgage, and in some cases I've seen where we just do another, especially with rates being where they are right now, and they're still in the workforce or they have enough money coming from their retirement plan that they just do a traditional mortgage and refinance into a lower rate. So it's really going in to find out what the needs are and the why. Why am I there?
Fantastic. Well, Cindy, thanks for joining us. I don't know if we had any questions pop up, but if you have any questions whatsoever about reverse mortgages, make sure to call Cindy. She's fantastic, takes time to answer any questions that you might have. But we appreciate you tuning in. Like I said, at Christensen Financial, we do home loans with a human touch, and we just want to make sure that we're providing the best cash flow and financing solutions for everybody out there.
Thanks for having me.
Thanks a lot.
All right. Bye.